Okay, good afternoon. Welcome to our session again. Today we're going to continue our discussion on financial statements analysis. Let's have a very brief review of what we have discussed so far. We have been using this financial statements of MicroDrive, and we have learned how to we have learned what the financial statements are, what can you find inside these financial statements and their purposes. We have learned how to do vertical analysis or common size statement where we reconstruct the financial statements, uh, statement of income statement, and the balance sheet, and replace all the values with percentage pegged to a particular account. So, for example, for the income statement, it's compared with sales. So everything here, every item here, every percentage here is expressed in terms of sales. We also learned to do horizontal analysis. Okay, so this gives us the growth rate, the year on year, because we're dealing with a yearly income statement, year on year growth rate. So we're comparing the growth rate from 2019 to 2020. And for example, in this case, sales grew by 70% from 2019 to 2020, and then by 20% from 2020 to 2021. So this analysis, this both vertical and horizontal, are very helpful as far as understanding understanding more the financial statements. And we said that when we look at ratios, when we look at metrics by which we assess the performance of a firm, we do not look at it in isolation. We look at it holistically. We try to compare it with other ratios, okay, and we benchmark it against two things: the direct competitors and time, okay. Because for example, let's suppose we recorded 7 million in our sales in 2021. Okay, so is that good or bad? Okay, that has no sense unless we compare it with a direct competitor. Let's suppose the direct competitor sales is 5 million. Okay, so can we say that the company performed better than the direct competitor? Okay, that's a tricky question, but okay, not so fast. Okay, you don't immediately jump into conclusions that our company performed better than the direct competitor based on just the 7 million and the 5 million. Okay, while it's true that in terms of an absolute sense, the competitor had generated more sales than us, that's not the whole story. Okay, you try to look at a holistic point of view when we compare the performance of two companies. For example, what if, let's assume the company had to generate this 7 million sales, they had assets worth 7 million also. So in other words, if you compute for the TATO, if you recall TATO, okay, TATO is your sales over your total assets. Let's say this is already the average for 2021 and 2020. Then you have a TATO equal to 1. Okay, so you have sales of 7,000, and your average asset base is 7 million also, and your TATO is 1. And we we tap ourselves on the shoulder and say we're okay, not knowing or not being mindful of the fact that the direct competitor had an average total assets of 1 million, okay, giving them a TATO of 5. So in this regard, we cannot claim that we perform better than our direct competitor. In fact, we are swamped by them. For every 1 peso of asset that they invested in, they were able to generate 5 pesos of net sales, while we are only generating 1 peso of net sales for every 1 peso of assets. Okay, so you can see here the fallacy or the folly, F-O-L-L-Y, of trying to analyze in bits and pieces. Okay, of course, we can say that the company generated more sales. That's a fact also that our company had generated sales of 7 million while the competitor only generated sales of 5 million. That's a fact that should be accepted. However, we cannot say that the company performed better. Okay, in absolute sense, yes, the fact that we had more sales, but in terms of efficiency, in terms of profitability, in terms of who is more efficient in the use of resources, then we need other factors. We need other metrics. Okay, and Tato is one of them. Okay, because in Tato you need to compare the net sales with the average total assets. So if this was the scenario, then we can say that we were outperformed by the direct competitor in terms of efficiency in the use of assets, in particular Tato. We were only generating 5 pesos of sales for every 1 peso of total assets, as compared to no one, yeah, as compared to the 5 of the direct competitor. Okay, so I hope that's clear. It's very important for us to really come from a more holistic perspective as regards looking at the performance of the firm. Okay, so may I just be excused by 1 minute? I just get water. Okay, so as I said, it's the use of the ratios have their proper use as far as assessing the performance of the firm. Okay, so on the other hand, as far as the vertical analysis is concerned, for the balance sheet, we make use of either the total assets or total liabilities and equity, since they're the same, in coming up with the common size statement or vertical analysis. And everything is expressed in terms of total assets or total liabilities and equity. Okay, so last time we also computed for this the net operating working capital, the total operating capital, and we saw that in terms of ROIC or in EVA, the company was able to create value for the shareholders. Okay, basing it on what was the weighted average cost of capital. The WACC is 8%, and in 2021, the company generated a return on invested capital of 13%. However, in 2020, management destroyed value, and that can be seen in the negative economic value added. All right, so we started discussing about financial ratio analysis, and we said that there are 5 broad types of financial ratios. We have liquidity ratio, asset management, debt ratio, profitability ratio, and market value ratios. And then our goal is really to finish this, but based on my experience with the other section, we only got to finish up to this last one. Okay, up to this market value book ratios. And since we won't be able to finish this today, your quiz will not be on Thursday. Most probably it will be on Monday. So we have to finish everything first. And on Thursday, once we finish this, we just move on to the next lesson. But that next lesson will not be included in the exams. Okay, so let's continue. We said that, again, ratios are there to guide us in understanding the performance of the firm, and also to provide us insights on how we, for example, we're part of the business, we're part of the company, and let's say we're under finance, how we can help more in managing the assets of the organization. Because one of the role of finance is to be, finance has a role of helping the firm to safeguard its assets, to make sure that the assets are being utilized to the hilt, being utilized in such a manner that will in an optimal manner. Okay, So we looked at liability, which is the measure. It's the metric of how capable the company is in paying off its current obligations. Okay, the other one, solvency, measures how the company is able to pay more of its long-term obligations. So we looked at two measures, current ratio and quick ratio. Now this would imply that we have to look at the and understand more, appreciate more the nature or the structure of the business of the firm. It's not because the current ratio is 2.6, will we say that the company is able to pay off its current obligations as they fall due. You have to look more at the nature of the assets, because current ratio involves your cash, your short-term investments, your receivables, your inventories, and your prepayments. What if most of the assets were tied in to inventories and or receivables, and that it takes the company a long time to collect on the receivables and to convert the inventories into finished goods and then sell? Then that could be a problem for the company, because they don't have the cash yet, okay, in order to pay their current obligations. And we said that it's not good for a company to default on its or renege on its promises to pay, or in its terms to pay its trade payables, for example. That might lead to the company not being able to borrow again from their suppliers. Okay, and that might all the more give them more liquidity problems. Okay, so we said quick ratio is a more, let's say, the more robust or the more, let's say, strict way in measuring the capability of the firm to pay off its obligations, current obligations. Here we see that the direct competitor is a lot better than us, okay, in terms of our capability to pay our current obligations. Okay, so again, the lesson here is that we just don't take these figures hook, line, and sinker. We can, of course, define what 2.6 means. Okay, for every 1 peso of current liabilities, the company has 1 peso of current assets. But ratio analysis goes deeper than that. Okay, it goes deeper than that. You have to look at the quality of the, let's say, for current ratio, it's current assets over current liabilities. We have to look at the quality of our current assets. That's why there is this quick ratio or acid test ratio. Okay, so we compare it with the past figures. Is there a trend? Are we going down? Okay, and then we compare it with the direct competitors. 2.7 versus 2.6. Okay. Okay, so those are the things that we need to look at. In the same manner, for asset management ratios, this tells us how efficient the firm is in managing its inventories, its collection, and its payables. Okay, so the inventory turnover, as we discussed, is akin to the days inventory outstanding, because one measures the number of times this is performed in a year, while the other one measures the number of days it takes to complete that cycle. So this measures how many days, as far as the DIO is concerned, how many days to buy raw materials, convert to finished goods, sell. Okay, so that's our DIO. And here we can see the discrepancy between, or disparity between, the direct competitor, which takes them 60 days, against our company, which takes it 95 days. Malaking difference, no? More than 1 month. And we said that for DIO, of course, the lower the better. But for ITO, the higher the better. So inverse, in the inverse relationship nila. Okay. Then we looked at ARTO, which is the number of times the company is able to collect on the receivables after they sell their goods or their services on account. So we say also that just like ITO, ARTO is the higher the better. Okay, because it means that the velocity of collection is faster. Okay, if it's higher as compared to lower. And we said that it's related to DSO, day sales outstanding. ARTO measures the number of times a year. DSO measures the number of days between cycles. Okay, and just like just like above, 9.3 yung R2 natin, yung R2 ng kalaban 15. So talo tayo, no? So that will reflect in our DSO, day sales outstanding. It takes us 40 days on the average to collect on our receivables from the time of credit sales, no? While it takes only the competitor 24 days. So that's around 15 days of discrepancy. We're giving away 15 days. Okay. And also the DPO, okay, which is akin to APTO. For APTO, it's the opposite of ARTO because here, the lower, the better. Okay, because the lower here means APTO measures the number of times it takes us to pay our current obligations, our trade payables. Okay, 10 times. So if it's lower, it means that we were given more time to pay our account, our payables, etc. And that can be seen in our days payable outstanding. So here, the average for the competitor is around 36 days, while on our part, it takes us only 21 days. We're required on the average to pay already our accounts in 20 days. So which brought us to the operating cycle, which is our cash to cash cycle. And we did, I think, a good discussion on this last time. Operating cycle is very important because it tells us the number of days it will take us to complete one cycle of buying raw materials, converting to finished goods, selling, and then collecting. So that's the cash to cash cycle. Cash out muna, and then when will it take us to get back the cash? Cash in. So you can see that once again, we are routed here by our direct competitor. 134 days tayo, sila 84 days. So makakadalawang cycle na tayo katatapos pa lang natin. Kasi ang pangalawa nito, 160 plus. And then for us, we just finished 134. Okay? Just by how many days? Okay, so also, we looked at the cash conversion cycle. Sabi natin, ito, importante ito. And the higher the cash conversion cycle is, it means the more expensive for the company because this is the number of days it will take us to finance our payables. Okay? So 112 days to finance our payables versus only 47. So once again, hindi nga tayo nangalahati, no? Dito sa 47 ng competitor natin. All right. So other types of asset management ratio, we have the FATO, okay, which is a measure of how much are we earning on sales for every peso of property, plant, and equipment. So on the average, we are generating 7.92 sales for every peso of fixed asset or property, plant, and equipment. I'm not sure, class, maybe I picked up the wrong number kasi medyo surprised ako, no? I have a suspicion that this is 9. Okay, na mas magaling si direct competitor based on what we have seen so far. Okay, but be that as it may, let's assume that this is 7. So in this regard, when we're comparing apples with apples, let's say this is 2021 also. So our direct competitor is generating sales of 7 pesos for every peso of property, plant, and equipment. And we are better as compared to our direct competitor in terms of the use of fixed assets to generate sales. Okay. However, if this is wrong, I might have committed a mistake in copying. Okay. So if this was 9, then once again, we perform lower or worse than our direct competitor. Kasi sila 9. 9 yung FATO nila, which means 9 for every peso of fixed assets, they were able to generate 9 pesos of sales. Okay. Same thing with TATO. The only difference is that this is measured with respect to total assets or assets, while the other one is with respect to 1 peso of fixed assets. So the TATO will always be lower than your TATO. Kasi ang divisor natin sa TATO, lahat ng assets. Sa TATO, yung ano lang, yung fixed assets. Alright? So, very important itong yung TATO, no? So we compare it. Okay, here you can see a deterioration in terms of performance. From 9.95 naging 9.08 to 7.92. So finance would normally raise these alarm bells and maybe have call for a meeting and talk with the maybe the CFO, etc. Because based on records, based on the data, the company is deteriorating in terms of productivity in the use of its fixed assets. Even also for total assets, bumababa talaga. And that's not a good sign. And unfortunately, we don't have the figure for the direct competitor. It would be, usually naman, nakukuha yung financial statements din ng direct competitor, and finance would benchmark their performance with the direct competitor. Okay? All right, next. Okay, we have the debt ratio. Okay, how leveraged the firm is, and the measure is the total liabilities over total assets. Okay, so let's compute for this. Total liabilities, I think we have to sum up our current liabilities there and your long-term liabilities. So these two, okay, and then we divide it by total assets, total liabilities over total assets. Our total assets is, okay, it's this one. Okay, or this one. Okay. So we have 43.8, and if I copy to the right, okay. So if we compare, horizontal analysis will tell us that the debt ratio appears to be quite erratic over the past years. Ano? Dati kasi 55%. Ibig sabihin, so for every 100 pesos of assets, around 55 pesos is financed by debt, and only 45 pesos is financed by equity. Okay, and then when we came here, lumaki na yung contribution ng debt, no? 80 pesos. Debt financed as compared to only around 20 for equity. Okay, so this has advantages and disadvantages. Isang advantage nito, di ba? Remember, the use of debt will be a leverage on profitability kasi nababawasan yung ano class? Yung the use of debt leads to what types of savings do we have? Anyone? Hello, class. What type of savings will we have if we have? Okay, thank you. This is correct. So Shikaina, yes, you're correct. This is we have tax savings. No? Kasi the use of debt will lead the company to incur interest charges, and interest is deducted before we compute for the earnings before tax. Okay, so interest is tax deductible. Okay, so we'll have a lower interest if we carry on debt as compared to not carrying debt sa natin sa financing. Okay, so and then it went down again. Okay, 43.8. Okay, so the disadvantage here is number one, it can also send wrong signals to creditors kasi the company might be hard put already in borrowing. If their debt ratio is 80%, ibig sabihin ng 20% lang yung contribution ng equity shareholders. So companies who would lend the company will charge them with higher interest kasi this is consistent with the principle of risk and return. Masyado ng risky kasi highly in debt na yung company. So that's one disadvantage of that, no? Difficulty in finding would-be financiers for potential projects that might have very very attractive returns. Okay? And also, lumalaki interest, no? As an expense. So that's one disadvantage of debt ratio. Okay. So here, if we compare this with 50%, hindi kasi natin nakita yung 2020 at saka 2019, we can only say that mas less leverage tayo. Now, is that good or bad? We cannot say. Hindi natin pwede masabi na mas okay si correct competitor. Mas masasabi lang natin na mas leverage siya. Kasi 50% yung debt ratio niya, tayo around 44% lang. Okay? And then also, is that the correct mixture of debt and equity? 44% and 56%. 44% yung debt, okay? And then 57% yung equity. So is that a good capital structure mix? Again, the answer lies in the best capital structure is the one that maximizes shareholder value. And there's a way to compute that. However, that's outside the armpit of this course. So just suffice it to say that that can be computed, and that's what finance does to determine kung ano yung magandang capital structure, at least a range of values, and target the company to have that kind of a capital structure. Okay, aside from debt ratio, we have times interest earned. Okay, what does times interest earned measure? Okay, I'll give you 1 minute to look at the formula for this. Times interest earned and then chat. Okay, it's a measure of how much the company is capable of paying its interest payments. Okay, just the formula, class. It's related to our EBITDA coverage. So kindly chat the formula for TI, times interest earned. Okay, we have one answer here. Okay. Ang TI hindi, no? EBITDA hindi. So thank you. Ano to? Shekinah, thank you. A little adjustment dito sa answer. Okay, so we have here, hindi ko makita yung family name niya. Ano ba to? Wait. Jude. Si Jude, ano to? Hindi ko makita yung family name. Ito. Jude Pereda. Okay, Jude, thank you. Okay, you're correct. No? It's EBIT over interest expense. So that's the formula for times interest earned. Okay, so let me write that in our Excel sheet. Okay, so this is EBIT divided by interest expense. Okay, so whatever value we get here, the way we read that is for every 1 peso of interest expense, the company has operating margins. Diba? Ang EBIT is operating, this is operating margin. Operating margin or operating profit. Si EBIT, no? EBIT is also called operating margin or operating profit. All right, so for every 1 peso of interest expense that the company incurs, okay, the company has times interest earned of profit, of operating profit to pay its interest, its service obligations. So ito, lagay ko na lang dito na capability, di ba? Ito capability to pay interest obligations. So it's the TI measures this one. How capable is the company in paying its interest obligations? Okay, so let's measure this. It's EBIT. And since pareho silang parehong period period account, ibig sabihin EBIT is taken for the whole year, okay, divided by interest, also interest expense is taken for the whole year. and EBIT divided by interest. So if we get that ratio, we have 6.28. Okay, so what does that mean? What does that mean? It means that for every peso of interest expense, the company has 6.28 pesos of operating profit, operating margin, to pay its interest payments. Okay. However, in 2010, okay, let me backtrack a bit kasi hindi ko pa pala na-discuss no? Itong 80.7, saan ang galing yan? Bakit tumaas? Why did it jump from 54 to 80? 80%. Apparently, if you take a look at the balance sheet, okay? So, yung debt ratio natin, which is total liabilities over total assets, ito yung liabilities natin, di ba? So, from 2019, 481 siya, naging 1.3 million siya. So, it jumped by a big amount, no? It jumped by 175%. Although bumaba siya noong 2021 by 21%. However, kasi tinitingnan natin yung jump dun sa 54% to 80% na debt ratio, no? Ito, isa pa yun, no? Ito, yung long-term debt from 323 naging 1 million. So that was a times 2 pa, no? Twice. Okay, so 323, i-times pa natin yung dalawa pa nito, no? Okay, so that was it grew by 209, no? 209.18%. Therefore, since it grew by 209.18%, it times 3 yan. Times 3 yung current amount, then times 3 to arrive at the next year's amount. So, ang laki ng jump ng ng liabilities, no? All right? So, liabilities increased by yung current nag-increase ng ng around 175% or 1.8 times. Si long-term debt nag-increase ng 2.1 times. While si assets natin, okay, si assets natin nag-increase lang ng 96% as compared to around 380% increase vis-a-vis 96% lang ng increase ng total assets. So I hope you're getting this. No? Ang laki ng jump ng ng liabilities natin as compared to total assets. So your liabilities was increasing at a faster rate than your assets. Okay, now let's go to EBITDA coverage. Before EBITDA coverage, you can see that the company was more capable of paying its interest expense in 2021 kasi 6.2 lang to. However, nung 2020, wala. Sa bawat piso ng interest expense, no? 10 centavos lang yung operating profit nila. So, yung 2020 was really a critical year for the company. But it rebounded, no? Noong 2021, bigla naging okay na yung tie niya, times interest earned. Okay, next, yung EBITDA coverage naman, minimeasure din niya yung capability to pay interest, pero hindi lang interest. No? Okay, capability to pay, let me see, to pay what? Fixed. Fixed amount obligations. So let's use that. Okay. So si EBITDA coverage, no? Ang minimeasure niyan, how capable is the company in paying its fixed amount obligations? Siyempre, isa na diyan si interest. Kasi si interest usually fixed yan eh. Every month or every year, merong fixed amount na binabayaran. Kasi ang assumption natin dito, fixed yung interest rate. Hindi naman siya nagbabago every year. Okay, and then yung principal niyan, kung kunyari bond dyan, sa dulo na babayaran yung principal. Hindi naman katulad yan ng let's say, ang tawag nito? Yung amortization, no? Bibili ka ng kotse, bibili ka ng bahay, bibili ka ng lote, okay, bibili ka ng building, and then usually you loan that, and then nababawasan yung principal. Ito hindi, no? Yung principal pareho hanggang sa dulo. Therefore, the interest payment is fixed. Okay, so what's the formula for this? Okay, dito yung formula, no? So ang formula nito, class, ano-ano ba yung mga fixed amount na obligations? Okay, let's take a look at the balance sheet. And may mga givens pala dito, no? First is interest, no? Fixed yung interest. So that will form part of the denominator. Another fixed amount is, okay, can you take a look at this portion? Ano dyan ang fixed? Anyone? What there is usually fixed? Okay, yes, correct, no? So thank you, Jude. Okay, yeah, you're correct. Ang fixed dyan is yung lease. Okay, lease payment. Kunyari, rental. Okay, you're leasing the area. Okay, unless nagkaroon ng increase, no? But usually sa isang kontrata, fixed yan. So you pay, for example, 100,000 every month, 100,000, 100,000 until the duration of the contract, and then you maybe another contract is done, and then pwedeng mag-increase yung lease, no? Okay, so that's what we mean by fixed. So I don't think na meron pa, no? Wala na dito. Lease payments lang yung fixed at saka yung interest. So ang magiging ano natin dito, ang denominator is yung interest plus yung lease. Okay. Yun ang denominator. Kasi capability to pay interest and other fixed cost eh. And the other fixed cost is your lease. So what will be our numerator? So our numerator will be, manggagaling tayo sa EBITDA. No? Bakit? Kasi sa EBITDA class, na-subtract na dyan yung na-subtract na yung, nabawas na yung lease dyan. Okay? Kasi ang susunod na ibabawas na, di ba, depreciation and amortization. Tapos interest na, tapos taxes na. So, sa EBITDA, nabawas na yung lease. So, we have to add back the lease kasi gagamitin natin sa pagbayad ng lease yun, di ba? So, the total amount available is yung EBITDA plus the lease. Okay, I hope this is clear, no? Binabalik natin yung lease kasi kasama yung lease sa capability ng firm na magbayad ng interest at saka lease. At kunyari, ang lease natin, 100,000. Okay? So, sa EBITDA, wala na yung lease, nabawas na yan. Okay, so we have to add back lease. Kasi, diba, yung amount na yan, plus the lease, yung EBITDA plus the lease, we're trying to measure how much funds we have to pay our fixed amount obligations. Okay, so I hope that that formula is clear. No? EBITDA plus lease divided by interest plus lease. Okay? All right, so that's the formula. All right, I'll give you 1 minute plus, and then magko-compare tayo ng EBITDA coverage na formula. Okay, let me pause share. All right, so please go. And once you're done, kindly chat in the chat box. Ano yung nakukuha nyo na what do you get for your EBITDA coverage? Okay, kindly chat your answers, please. Kahit yung 2021 lang. I'll wait for your responses. I'll wait for your answers. Mali pala tong... What are you getting, class? 4.52. Okay, let's wait for the others. Thank you. Who's this? Mark, thank you. So Mark got 4.52. So may I see the answers of the others? Mark, kindly share your answer to everyone, please. Okay, also, who's this? Yao, kindly share your answer to the others, please. Mark and Yao, kindly share your answer to everyone, please. Okay, thank you, Yao. How about Mark? Ano answer mo, Mark? Thank you, Mark. Okay, so Yao has 10.63. See, Mark has 4.52. I'm waiting for the answer of others. Okay, so that we can evaluate. Waiting for the others, class. Okay, so si Jude, 5.522. Okay. Yung iba, walang answer. Okay, so 5.522 din, si Shikaina. Right, any other answers, class? One more minute for you to key in your answers. Okay, so let's see. Jude, could you kindly share how you got 5.52?
Okay. Sinolve ko po muna yung EBITDA
Okay,
2021. So, sales minus cost of goods sold. Inad ko po muna yung cost of goods sold and other expenses. And then,
okay.
sinubtract ko po sa sales. And yun po yung EBITDA ko. Then, I added the 48,000. Yun po yung numerator ko. And then,
Okay.
yung denominator, yung interest kasi hindi ko po mahanap yung ibang so yung interest ko po is yung interest expense from income
Yeah.
statement
Tama
and
yan.
I added the lease po for
Okay.
2,000.
All right. So thank you. Thank you, Jude. And also, I think Shekinah. So my answer is also 5.52. Okay. By the way, before we go to EBITDA coverage, I don't think I have discussed yung TIE, no? Yung times interest earned. So yung TIE, ang minimeasure niyan, how much the company has, how much operating profit the company has to pay its interest obligations. O did I? Na-discuss ko na ba? Okay, anyway, parang ulit na lang. No? So, if you can see, 2020, wala. No? Hindi tayo makakapagbayad ng interest kasi it's not even one. Diba? 10 centavos lang ang operating profit natin, okay, to pay 1 peso of current liability, not current liability, interest expense. So 2020 was really a bad year in terms of capability of the firm to pay interest expense. Noong 2019, 3 pesos of operating profit uh, for every 1 peso of interest expense. 2021 seemed to be a better year kasi mas umakyat pa siya. No? Right? But if we compare it with the industry, halos pareho lang. Siguro nakaano lang to, no? Oops, sorry. Nangyari dun. Okay. So in this regard, our company is almost at par with the direct competitor in terms of our capability to pay interest payments. Pero dito sa EBITDA coverage, you can see the disparity. So this means that uh, we have 5 pesos and 52 centavos to pay of 1 peso of interest and lease. So the company is theoretically they're capable of paying their interest at saka lease obligations. It was 2.61 in 2019 and it went down really in 2020. No? Less than 1 to. Okay? All right. So, however, when we compare ourselves with the direct competitor, 8 sila, no? So in terms of EBITDA coverage, we lag behind them. All right. Okay. Now, those are the debt ratios. No? Una yung leverage ratio, how much of the assets of the firm is financed by debt. And then, kung kaya ba natin magbayad ng interest, at saka kung kaya ba natin magbayad ng fixed amount obligations natin. And we can see that we had a bad year in 2020, but there was a recovery in 2021. Okay, profit margin is simply your net income after tax divided by your net sales. Okay? So ang mini-measure nito, sorry, may typographical error pa. So this should be 0.36. Okay, kindly change it please. 0.36 siya. Ito din mamaya, 0.70. Okay, so what does this mean? It means that for every peso of sales, ilan yung profit natin? Yun ang profit margin natin. Now, iba to sa operating margin. Ha? Kaya ang operating margin kasi, di ba, EBIT divided by, okay? Ba't andito to? Nasa taas to. No? Sorry, baka malito kayo. No? It should be here. Okay? Yung EBIT is equal to your operating profit or operating margin. So dito, nawala. Is equal to net income after tax. So this is the net income after tax. Okay, divided by your sales. Okay, let's make this into a decimal. Control 1, and make it into a number. Okay. So what does this mean? Okay, we can interpret this in terms of 1 peso sales or minsan mas madaling maintindihan kung 100 pesos yung sales. Okay, so for every 100 peso of sales, the company earned dito 4 pesos. Kailangan gawin din natin times 100 kasi yung sales times 100 natin. So 100 pesos of sales, the company was earning 4 pesos. Noong 2019, 3 pesos yung na-earn niya. Wait, dali so sorry. I forgot to flash the formula for EBITDA, no? EBITDA coverage. So for EBITDA coverage, what I did was just to sum your EBIT less your depreciation and amortization and your lease payment. No? Kasi, di ba, ang EBITDA is EBIT plus depreciation and amortization. And then add the lease. And then divided by the interest and the lease payment then. So this was the formula that I used, okay, in getting the EBITDA coverage. Okay, for the benefit of those who might not have been able to get this, I'll just put here the formula text. Okay. Ito yung formula ng ng EBITDA. Ay. Dapat this should be here. Okay. EBITDA coverage. Okay. Any questions, by the way, about the computation of EBITDA coverage? Were you able to get it? Sorry, I failed to ask that. No? Thank you. Sorry, medyo thank you, Julian. Medyo yung ubo ko, no? Okay, so sige guys, paki-chat naman kung nakuha niyo yung Yao, please, yung question mo, i-share mo sa lahat. 'Di ba ito EBIT plus depreciation plus lease. Kasama yung lease. Okay? So for the numerator, it's EBIT plus depreciation plus lease. Kasi kino-compute natin kung ilan yung available natin na pambayad. Yung EBIT plus depreciation, yung EBITDA yon, binawas na dun yung lease payment, no? As an expense, nakabawas na yun eh. So kailangan i-add back natin siya para malaman natin, okay, kung magkano ba talaga yung available natin na pondo pambayad. Okay, so hindi lang EBIT plus depreciation, kasama dapat ito. Kasama dapat yung lease. Okay, all right. You haven't answered my question, class. Were you able to get the EBITDA coverage? Paki-chat naman yung 5.52, tapos yung 0.81 at saka 2.61. Okay, thank you. Okay, good. All right. Okay, so then we did the profit margin, which is just net income after tax over net sales. Okay, so ito, ibig sabihin nito, 4 centavos, no? Yung kita natin sa bawat piso na benta, or for every 100 peso sales, the company earned 4 pesos only. Okay, compare that with 0.36 ng competitor. So 36 pesos. So sa benta nila na 100 pesos, kumikita sila ng 36 pesos. So ang laki ng discrepancy, 9 times. So there's something that the company, direct competitor, is doing, which we are not doing, or there's something that it's not doing that we're doing. So ano kaya yung secret nila? Bakit sila nakakapag-generate ng ganyan? Are they able to cut down on costs? Are they using very efficient machines so that wala mga wastage? Tayo, ang dami nating wastage. These things, no? Okay. Now, related to Tato, for example, is yung basic earning power. So, could you kindly chat, please, kung ano yung formula ng basic earning power? I'll wait for your formulas. Anong formula ng basic earning power? Nasa profitability ratios na tayo, no? Basic earning power, anong formula niya? All right. EBIT over your total assets. Okay. Let's write that here. The EBIT. This is correct. EBIT over your total assets. So, similar siya dito sa Tato natin, di ba? Ang kaibahan lang, si Tato, it takes a look at your net sales. While si basic earning power, yung EBIT lang yung tinitingnan niya. Yung operating margin lang, yung operating profit. So the basis of the numerator is the operating profit already. No? I-divide natin ang total assets. While si Tato, net sales yung tinitingnan natin divided by the average total assets. Of course, since EBIT is for the year, yung total assets natin should be, dapat bagay ko to, average total assets also. Okay, so let's compute for this. So this is your, we have the EBIT already. EBIT natin, nasa income statement natin. EBIT, okay? Divided by, we get the average of our total assets. That one. Okay. So our basic earning power, okay, ito, class, may mali ito, no? Pakilagay nga na 187.187. O 18 na lang, o 19 na lang. Okay, 0.19. There. Sorry for the typographical error. Okay, so how do we interpret this? Per average asset na ininvest ng company, magkano yung operating margin nila? Magkano yung operating profit? Okay, yung operating margin, how much was it? So, of course, we know that here, the higher the better. No? So, nung 2019, 14 centavos for every peso of total asset average. 2019, 2020, bumagsak siya. 1 centavo na lang, no, for every peso. And then nakabawi in 2021, okay, 16 centavos or 16 pesos for every 100 peso of total assets. And compared that with the direct competitor, 19 pesos per 100 total peso of total assets. So talo tayo, no? But compared to yung BEP, hindi naman ganun kalayo, no? Kasi si BEP masyadong malayo talaga. Yung profit margin. Ang layo ng profit margin natin. All right. Any questions about BEP, about basic earnings power? Again, I request you to please chat if you were able to get the BEP, basic earnings power. Okay, good. All right. Then we have return on assets and return on equity. as I mentioned to you before, pag nakakita kayo ng return na ano na parang turnover yan, no? Parang turnover din yan. So return on assets, automatically ang ano niyan, ang numerator, depende kung return, net income kasi yung kapartner niyan, di ba? So divided by average total assets. Pag na-prepare si balance sheet account with the income statement account, kunin natin lagi yung average. All right, so what's the formula for ROA? Return on assets. That's your net income after tax divided by your average total assets. Oops. Net income after tax over average total assets. Okay. So si basic earning power, ano, no? Wait, sandali, baka na, did I get the, paki-check nga please, sorry minsan nalilit na, ano ako. Tama, ano, yung kindly check yung formula natin ng ROA. Just to be sure. Yeah, I think this is correct. Returns yan, so net income yung tinitino natin. Tsaka ito na pala, na nalagay ko na dito. So that's your, this is your ROE. It's net income after tax over average total equity. So I'll copy this. Total, average total equity. Okay. So let's compute for this too. Ang return on assets natin, we know the net income. Net income is this one divided by average of our total assets. This one. Okay, let me just see yung total equity natin. 36, row 36. Okay, gawin natin decimal place. And kinati ko na lang yung formula dito. Tapos yung total equity natin, anong row yun? Row number 36. 36. Oops, ano nangyari? C13. Average. Ba't tinype ko? Dapat 36. Sorry, 26 yung na-type ko. Okay, mali yan. Dapat 24. I think I got the wrong number. Dapat total equity should be 35. Okay. All right. Okay, so what do we have here? No? We have here the return on assets and return on equity figures. They're the same. Ang kaibahan lang nila yung divisor. Yung isa, dinidivide sa total assets, which in the presence of, of liabilities, it will be bigger than your total equity. Okay, so anong ibig sabihin no? Interpretation? For every 1 peso of average 1 peso of asset invested by the company, it earned around 8 centavos of profit, no? 8 centavos yung profit na na-earn sa bawat piso ng total assets. Tapos sa bawat piso ng equity na pinrovide ng shareholders, the company earned around 20 centavos. And sabi ko nga mas mataas yung yung ROE kasi mas maliit yung equity kaysa total assets. Okay, then same thing nung okay, buwasan natin ng decimal place to. Okay, nung 2020, diba? Loss, no? Net income after tax negative kasi kaya negative to. Then from 2019, mas mataas to compared to 2021 is bigger compared to 2019. I'm sorry about this. This is wrong, no? Kasi alam ko mas mataas tong natin. Lagyan na muna natin at 0.2 just to kasi from all indications mas maganda talaga yung performance niya. So kindly put here 0.28, no? So this means that the competitor is outperforming our company. Okay. All right. In the interest of time, class, ako na magbibigay ng formula nito Ano yung price to earnings ratio? This is also called others would call this PER. PER, no? So ang price to earnings ratio is your market price or share price. Magkano yung price ng stock ngayon, okay? Divided by your EPS, yung earnings per share. Diba? If you remember, earnings per share is equal to kano? Net income after tax divided by number of shares issued and outstanding. Okay? In other words, dinidivide natin net income after tax dun sa kung ilang shares ang na-issue na ng company. So it's called your earnings per share, EPS. So actually, these are share price, no? So meron given yung share price natin. Share price is this one. Share price. And then binigay na sa atin yung EPS. Kinumpute na. Earnings per share. This is 1.01. There. Okay, copy ko yung format nito. All right. Okay, so wala tayong figure dito, so wala ito. No price was given there. So, binako ko na lang. Okay, so what does this mean? Price per earnings ratio. Ang ibig sabihin nito, you should be willing to pay 12 pesos and 5 centavos for every 1 peso earnings you will get from the company. Okay? So ito yung price niya, no? For every 1 peso that earnings you'll get from the company. 1 peso per share. And we can see here that pag mataas to, ibig sabihin mahal. Mahal yung presyo ng company pag bibilhin mo. Bakit mahal? Ito 12.05, ibig sabihin nun, you should be ready to buy or to pay the company 12.05 for every 1 peso that you're getting from them. Okay? So the higher the pair, ibig sabihin, the more expensive it is. So yung mga analysts tinitingnan to, tapos when they see that the PER is quite high, they would usually shun away from that kasi mahal siya, no? Mahal siya because of the PER ratio. Magkano yung price niya? Okay, so kailangan alam mo yung price ng share. And then i-divide mo ng EPS. No? So if it's very high, then it means that you have to, you're paying, if you're going to buy the shares of stock, you'll be paying 12.05 per 1 peso of earning EPS. No? Si direct competitor, mas mahal pa, 14.2. Okay, so quickly, guys, could you kindly check yung compare natin si Globe, si Smart, at saka si PLDT. Okay, makikita yun sa net, please. Kindly do that and kindly chat it, please. Tapos, kung ano, pakisama na lang din yung link para for those of you who were not able to get it. Let's wait for somebody to chat the price per earnings ratio of Globe, of Smart, and PLDT. Okay, anyone, please? Okay, chat, waiting for you to chat. Pakihanap yung per ni Globe, ni Smart, ni PLDT. Yung price per earnings ratio nila. Waiting for somebody to put in the chat box yung nakita nila kung ano yung per ni Globe, ni Smart, tsaka ni PLDT. Price per earnings ratio. Why am I not getting any response from you? Madali lang yan, guys. Google nyo lang, no? Okay, thank you. All right. So, okay, so may answer dito si Kathleen. Okay, may answer din si, who's this? Angelo, okay. Okay, thank you guys. 9 point, okay, thank you. All right, good, thank you, Dean. So, ang prices down, 9.82 si PLDT. Bakit may conflict to? Mali yata tong ano. Dapat, ang alam ko, 14 yata si Globe, 14.94. So si PLDT 9.82, si Smart 4.91. Okay? So those are the per, no? Globe is 14.94. Okay, tapos si 9.6 din nakalagay dito. Double check nyo nga yung Globe kung ano. Saan mo kinuha din yung ano mo, yung figure. Di ba 14.94, no? Okay, so 14.94 yung Globe, 4.91 si Smart, at saka 9.82 si PLDT. Okay, so those are the pairs, no? So from an investor's perspective, Globe is the most expensive. Okay? Kasi 14.94 pesos ang this is not the this is not how much you're going to buy Globe, no? Hindi. Ang per kasi dinidivide natin ba ng earnings per share. Iba yung share price, no? Yung share price yung numerator. Okay? Yung numerator. Pero dinivide pa natin siya ng EPS. So yung per, it's a ratio of how much the stock is valued for every peso of earnings na iproprovide niya. So the higher, the more expensive. So sometimes analysts or ito, advisors will, kunyari, ganito nakita niya, sasabihin niya, pinakamura ang Smart. Then you can, maybe it's good to invest here in Smart this time. Kasi siyempre nagbabago-bago yan, no? Okay, yung share price nagbabago siya, daily nga nagbabago yan, di ba? Oftentimes we can use the yearly na EPS, na earnings per share. Okay, so we can see here that Globe is the most expensive, followed by PLDT, and then last is Smart. So this tells us of how expensive the share is. Okay, clear yon? Plus yung per ratio na yan. Okay, I hope that was clearly explained. May I request you to please chat in the chat box kung yung comment nyo kung clear siya. Na the higher the, of course, when you make decisions whether to buy in that stock, hindi lang medyo nalito po ako, ano ibig sabihin how much the stock is valued. Okay, the stock is valued, hindi ito yung value ng stock, no? Yung 12.05 na yan, hindi yan yung value ng stock. Yung value ng stock, yung share price. Okay? Given sa atin 12.17. Okay, so let's be clear about that, no? Yung per it's a ratio. It's a ratio where you're computing for, where you're dividing the share price with the earnings per share. Okay, so I hope that's very clear, no? Hindi ko sinasabi na ang Globe, ang price niya ay 12.05 or this company, ang price niya ay 12.05. Hindi. Ang price nga niya binigay sa atin, 12.17. Diba? Yun ang price ng share na to. Ayan, 12.17. That's the price of this stock. Okay, at this particular time, no? Okay, 12.17 siya. Pero anong ibig sabihin ng per? Again, tingnan nyo lang yung class. Tingnan nyo lagi yung formula. Kasi yun yung kwento niyan eh. Ang ibig sabihin niyan, sa bawat piso na makukuha mo sa company na to, and earnings per share kasi yun, okay, it will cost you 12.05 to quote-unquote buy. Quote-unquote guys, kasi that's not the buying price. That's not the share price. Okay? Pero we just reduce the, ginawa lang natin na ratio and proportion ng EPS to the price. Ang gagawin natin na yung 12.05, di ba, this is equal to 12.05 divide by 1 yan, di ba? So ano yung 1 doon? Yung EPS. Ano yung 12.05? Yung share price. Okay, so based on this ratio, okay, ang price ni Globe, anong company natin, ni Micro, is 12.05 per 1 peso of earning. So willing ka ba na gagastos ka o bibili ka ng isang share na ang gastos mo 12.05 sa bawat piso ng EPS? Okay? Willing ka ba na gagastos ka ng 14.2, no? Theoretically, to have an earning of 1 peso. So the higher the per, the more expensive it is. Okay, so is that clear, class? Yung per ratio? Okay, it's already time. Okay, may I have 2 minutes? Gusto ko lang mapareho tayo ng ng kabilang section. Konti na lang to, no? Okay lang ba, class? 2 minutes lang para matapos natin to. Ito, isa lang naman to, no? Isa-isa, no? Wala tayo dito. Is it okay, class? Your permission is requested to extend just for none. 2 minutes lang para matapos na natin yung Okay, so ito lang yung may border. Okay, so let me go through the formula already. Alin mas maganda? Again, share your question, guys, to the class, no? So it depends on it depends on it depends on who's asking the question. May question dito si Sukaina. Shekinah, kindly share your answer to the class. Ano mas maganda sa business? Kung higher per or lower per? Depende. Kung ikaw yung mag-i-invest, kung ikaw yung bibili ng shares, syempre mas gusto mo yung lower per. Kasi mas mura. Okay? Pero kung ikaw shareholder ka na, okay, ang ibig sabihin kasi ng mataas yung per, ibig sabihin mataas na yung prices sa market. Di ba? Kung mataas na yung prices sa market, ibig sabihin nag-appreciate, siguro malamang nag-appreciate na yung share na yon, ng stock na yon. Eh kung stockholder ka dun, eh di ba gusto mo yon? Gusto mo na tumataas yung market value, yung share price. Okay? Gusto mo tumataas yun kasi later on, pag binenta mo yung share, mataas yung value. Okay, so that answers your question. No? I hope, Shekinah, Shekinah ba to? Yeah, Shekinah. I hope that answered your question. So it depends on who's asking. All right, so ito na lang, class. Bigay ko lang yung formula nito. Price. So again, ito, share price din to, no? Share price din per net cash flow. No? Net cash flow per share. Okay, so didiretso ko na yung formula. Ano yung net cash flow natin? Di ba yung net cash flow natin, yung naalala yung cash flow natin? So net income after tax plus depreciation. Di ba? Pag ginagawa natin yung yung para maging cash to, no? Si net income after tax plus depreciation. And then, so ito na yung net cash flow. And then, i-divide natin siya ng, okay, ano nangyari dito? Saan na yun? Nawala. Kailan pa nang mamadali. Okay. But if you need to go, guys, sige lang. Anyway, may recording naman to. Tatapusin ko lang to in 2 minutes. Okay, so this one is already the net cash flow. Pag dinivide natin siya ng number of shares, and yung number of shares kasi nagbago, no? So dapat, kasi ito, net cash flow yan for the whole year. Tapos itong number of shares, at the end lang to eh. So dapat kinukuha natin average, if you recall the principle. No? So this is the cash flow per share. Okay? So cash flow per share, and then i-divide natin ng price yan. So price divided by, this is cash flow per share. Divide natin ng number of shares. Enter. So that's your answer here. No? So 6. Ibig sabihin nun, so ang price niya, 5.70 per 1 peso of cash flow. Again, pag the higher this is, the more expensive. So mas expensive yung competitor natin. Okay? And then lastly, market price versus book value price. So good, binigyan na sa atin to, no? Market price is 12.17. Ito na yung price per share. And then book value per share binigay na, 7.91. So yun lang, diretso na yun. No? Okay, makuha rin pala natin to. Okay, so that's it, no? Okay, so sorry for the extension. So next meeting, tatapusin natin to, no? In class. Okay, so I leave you to try to find out ano yung ibig sabihin nitong mga to na nahuli. Anyway, balikan natin ng konti next. All right, so I'll stop recording now. Thank you so much for your